Welcome back to this month's edition of STRAT Wealth Updates. Joined here with Carrie. Thanks for joining us today. And the topic of discussion here is going to be life insurance. For today's topic, we're going to keep it high level though, just some broad strokes around life insurance. Not only how to think about it, but also how much you might need, and then the different types that are out there today. This is a very common question that we get, especially when we talk to new individuals and families that are looking to hire us for wealth advisory services. This is a topic that we feel very passionate about to make sure it's right-sized and done in the most cost-efficient way. So Carrie, why don't we kick it off with the basic of what is life insurance?
So at the very core level, life insurance is a strategy to make sure that if you were to unexpectedly pass away, the people that are depending on you for income, support, etc., will still be able to maintain their lifestyle. And that sum of money is also known as the death benefit.
Okay. So that death benefit, one of the questions we always get or comments is like, well, life insurance is so great because it's tax-free. Is it always tax-free?
Depends, of course, on many factors. But generally, the death benefit is received by the beneficiary income tax-free.
Right.
But that's not necessarily completely tax-free. There can be situations where the death benefit would be subject to estate taxes. Or maybe the death benefit pushes you into a situation where there are estate taxes.
Yeah, that's very important to keep an eye on and something we help clients monitor just based on the growing net worth over time, because life insurance can just compound that estate tax issue if it's not structured the right way and potentially moved outside of the estate. So we hear that a lot and just want to make a couple comments there. How do I know if I need life insurance? So what are the things that we look at for our clients?
First thing to think about is, who is really depending on me from a financial standpoint? Whether that is family member or spouse or your children, that is really where you want to start, because the fact of the matter is you want to make sure that if you were to pass away tomorrow, for instance, that those people will still have their secure lifestyle and will be able to accomplish those goals that will still remain important no matter what.
The first point of any conversation needs to be driven on what are those needs and what are those obligations that you're trying to fulfill? Because we've seen a lot of situations, if you saved enough for retirement and lifestyle going forward, you don't need life insurance. Or if you're single and you have no debts out there and ultimately no children, you don't need a lot of life insurance, or you need zero life insurance at that point. So that's where it's really starting with that conversation and understanding what those obligations do you have today, but also in the future.
So what are some of those obligations that people can start to think about? Because it seems like a lot of clients will come to us being like, okay, I probably do need it, but how do I really know where to start?
Yeah. First, think about your children. That's usually a big one when people start to think about life insurance as they expand their family. Children, mortgage debt, other business debts that are out there. Then also starting to take a look at just lifestyle funding. Those are all things, depending on your household income situation, that you want to start to look at to make sure that you have some death benefit in place to secure that what if one of you or both of you passed away. All right, let's keep going. Let's take a look at how much life insurance I need. I know that one of the numbers we see all the time, I need 10 to 20 times my gross income. How do we think about it?
Well, it's one thing to list out all of these needs that would be, needing to be covered. But it's another thing to actually quantify what some of these numbers would look like. So even trying to budget out, like what if funding education is important, having a good understanding of what that cost could look like in the future. Understanding what your lifestyle costs today. That's a really hard question for a lot of people.
Yeah.
And figuring out also how much that would grow over time too. How much do I need also makes me think of, at what apart at what stage of life am I in right now.
Yeah.
Younger people or older people have different needs, and so these things kind of all change over time.
Yeah, and I think about like a younger family, the time horizon with their children and those mortgage, maybe they have a larger mortgage at that point and they're still in that accumulation phase, have a higher insurance need versus someone who has been working for 30, 40 years, ultimately is close to retirement, maybe has all those obligations filled, and their need for life insurance goes down.
Right.
So there's that crossing point that you always want to continue to monitor to make sure if you're paying premiums towards these dollars, it's done with a purpose and intention that it's going to replace something if you pass away.
Right. Right. It's kind of understanding that crossover, like you're saying, fulfilling income needs versus understanding the assets that your beneficiaries would inherit too.
Right.
And those levels will change.
Yeah, and it's a great point because if there are legacy goals and dollar amounts you want to secure even for your children, we have a lot of those conversations. This is where we see life insurance kind of brought into play from a secondary discussion from not lifestyle fulfillment, it's more legacy planning.
Right.
At the time. Good point. So when we think about life insurance and the solutions that fulfill those obligations and death benefits, there's really two types. There's term insurance and permanent insurance. Why don't you highlight the difference between the two?
Term insurance is really just insuring one's life for a certain amount of time. The main differences are the duration and the cost. Term policies end at the end of the term, so that would also entail lower premiums. Conversely, permanent insurance lasts your entire life, ends up being more expensive.
Yeah, and when we think about the permanent insurance piece, that's usually secondary. When we're looking at a life insurance situation and fulfill those obligations that we have identified, usually we start with term because it is the least expensive, but it's fulfilling a need if that one if happened. But then as your savings components continue to build, we do look at other policies such as permanent life insurance, or as we highlighted earlier on, the estate planning / asset protection conversation around life insurance is really important to make sure that you're kind of maximizing your wealth transfer opportunities there. So if you have questions on if you have the right type of life insurance, 2, if you have enough life insurance, or 3, if you're thinking about getting rid of some of your life insurance, give us a call. This is part of our annual review process that we're going to be looking at for the clients that we do serve. But this is important because at the end of the day, you want to make sure you have not only the right type of life insurance, but it's done, again, in the most cost-efficient way. So reach out to us with questions, and we look forward to seeing you next month. Thank you.